we have 8 banks suppressing the price of silver to highest degree. Naked shorting, meaning they're shorting it and don't even have the silver to deliver if called for delivery in large numbers. But that's what the banks around the world, like India and China, are doing. They're standing for delivery. No one ever did that before. Silver, it is wealth, but it is unquestionably the most undervalued asset on the planet, and it has nothing to do with supply-demand fundamentals. It has everything to do with these 8 banks, and these 8 banks are going to get caught. I think they are trying to stop doing what they're doing and get out of these short positions, but what does that say for the military-industrial complex? It's a very sticky wicket because silver is disappearing, not only above ground, but below.
Recently, the silver market has seen a big shakeup. Major banks are rethinking their strategies, with the latest commitment of traders caught report from the Commodity Futures Trading Commission CFTC showing that banks are pulling back from their aggressive short positions in silver futures. Meanwhile, funds are selling off their contracts, suggesting banks might be hedging against potential market risks, which could mean a market bottom is near. Andy Schectman, CEO of Miles Franklin, points out that 8 major banks, including Bank of America, JP Morgan, Goldman Sachs, and HSBC, hold the largest short positions in silver ever recorded. Analysts worry that this huge bet against silver's price could be risky and might backfire if market conditions change. Countries like China, India, Russia, and Saudi Arabia are taking advantage of the current market by opting for physical delivery of silver instead of just settling futures contracts. They're leveraging the low prices caused by these short positions to strengthen their holdings. Meanwhile, the London Bullion Market Association (LBMA) is seeing a significant drop in its silver reserves. Andy finds the LBMA's reported daily trading volume of 292 million ounces of silver surprising, as some believe the actual volume could be as high as 2.9 billion ounces per day. This massive trading activity is thought to keep silver prices artificially low, hiding significant demand from sectors like advanced weaponry and high-tech industries.
There are 8 very large commercial banks. They would be like Bank of America, JP Morgan, Goldman Sachs, HSBC, etc. These banks are shorting commodities. Now you can see what is happening in the price of silver. You have 8 banks that are, for whatever reason, as dumb as a mud wall in a rainstorm, shorting the price of silver to a degree that no one has ever seen. In fact, it is the largest concentrated short position in the history of the COMEX market. Ask yourself, why? Why would this happen? Now, I'm going to show you why this is happening, but here is what the rest of the world is doing as a result of it. The folks in China, in India, in Russia, Saudi Arabia, this is what they're doing. Those are the vaults right now. That is the LBMA, the London Bullion Market Association. It's the largest holding of silver in the world. They're draining it. They're standing for delivery, these countries. No one ever stood for delivery before. So as we have 8 banks suppressing the price of silver to the highest degree, naked shorting, meaning they're shorting it and don't even have the silver to deliver if called for delivery in large numbers. These are the supply-demand numbers from the Silver Institute. What do we notice missing? Industrial, 9%. Electrical and electronics, 9%, of which photovoltaics, that would be solar panels, 20%. Brazing, alloys, and solders, 3%. Other industrial, 9%. Photography, -3%. Jewelry, 4%. Silverware, 7%. Where is this? And could that be why you see this? Why you have 8 Western banks doing everything in their power to suppress the price of silver in a very unnatural way? The London Bullion Metals Association, this one right here, who's watching all of its silver disappear, they have 800 million ounces of silver in their vaults. And 500 million of it belong to, you can see just over 800 million there, 500 belong to the ETFs, registered in the names of the ETFs, like Bullion Vault and SLV and whatnot. That leaves just over 300 million, yet they admit to trading 292 million ounces of silver per day. But that 292 million ounces of silver per day, they admit to being 10 times understated because they only show the final settlement numbers, not all of the trades that it took to get there, which would mean they're trading roughly 2.9 billion ounces of silver per day. That's 3.5 times global mine supply annually per day. They are holding the price down because of this. They don't want the world to know that silver is needed for high-tech weaponry, for aerospace, for stealth bombers, for weapons of sophisticated nature that have sophisticated guidance systems. They all need silver. And about 500 ounces in the tip of a tomahawk. So in 1942, if we needed 200 million, what do we need now? And does that explain why 8 banks in the West would be as stupid as they are to try and suppress the price? But what's happening is that the sophisticated traders around the globe in Japan, China, India, Saudi Arabia, Russia, they're standing for delivery, and they never did before. So when you talk about silver, it is wealth, but it is unquestionably the most undervalued asset on the planet, and it has nothing to do with supply-demand fundamentals, the price. It has everything to do with these 8 banks. And these 8 banks are going to get caught. I think they are trying to stop doing what they're doing and get out of these short positions. But what does that say for the military-industrial complex? It's a very sticky wicket because silver is disappearing globally. At the end of World War II, the dollar became the world reserve currency because we took over for the pound sterling. And it was at Bretton Woods, New Hampshire, where this was decided. The Allies met, and the United States would be the world reserve currency. And we told the world that if they would take our dollars, they could always exchange them back to the government for a fixed rate of $35 an ounce. And that made our currency as good as gold. In fact, we ended up, excuse me, I'm battling some allergies. We ended up holding most of the world's gold after that too, because these countries who had been through 2 world wars were able to send their gold here to the United States where it was safe and Western rule of law. And we would hold their gold and we would pay them $35 an ounce for it. And then they could take the proceeds, those $35, and buy US treasuries, which would yield a return for a non-interest bearing asset that they no longer had to store within their own borders. And they could always exchange those dollars back at any time into gold for $35 an ounce. So it was a good deal all the way around. And that's what made the dollar the world reserve currency until the end of the Vietnam War, when President de Gaulle from France said, well, you know, they're printing more money than they have gold behind it. We should give them back their dollars and get the gold. And that's what he did. He sent warships to New York Harbor filled with dollar bills and said, give us back our gold. And we did. But then President Nixon took a very unconventional step in August of 1971, and he closed the gold window. He went back on our promise to the world. No more exchanging dollars for gold. We're keeping what we have. And it was supposed to only be temporary. It's never opened back up. At that point, the dollar was backed by absolutely nothing. That's called fiat. And it was that way for another 2.5, 3 years until Henry Kissinger went to Saudi Arabia in 1974 and struck a deal with the Saudi kingdom. And he said to the Saudis, we will protect you and OPEC, all the oil producing countries. No one will ever mess with you. We will provide you weapons. Think military industrial complex, the need to make high-tech weapons. We will protect you and your allies who are in OPEC. But for that, you will value oil globally in US dollars. And you will take any excess and you will recycle those dollars into US treasuries. And that was the deal that we've seen for the last 50 years. It created a synthetic demand for the US dollar where every single country in the world has had to stockpile dollars in order to accumulate oil. It's called the petrodollar. I think that's why you own gold and silver, because it's wealth that has outlived everything the world's thrown at it. And through it all, the biggest money in the world, the central banks are buying it at a level the world's never seen. It's just not the United States central bank. And in fact, they're doing everything they can to hang on to the last vestiges of power that's slipping away because of their own stupid decisions, both monetarily, fiscally, and also their policies around the globe. And that's why you own gold and silver. And that to me is unequivocal.
After World War II, the US dollar solidified its role as the world's leading reserve currency, initially supported by the gold standard and the Bretton Woods system. Under Bretton Woods, currencies were pegged to the US dollar, which was fixed to gold at $35 per ounce. This arrangement facilitated international transactions in US dollars, which foreign governments could convert into gold. However, this system changed dramatically in August 1971 when President Richard Nixon closed the gold window, ending the dollar's direct convertibility into gold and transitioning it to a fiat currency system. In 1974, Henry Kissinger negotiated a pivotal agreement with Saudi Arabia. The U.S. promised military protection for Saudi Arabia and other OPEC nations in return for their commitment to price oil exclusively in US dollars. This agreement created the petrodollar system, ensuring a consistent global demand for dollars. Despite its long-standing influence, the petrodollar system now faces challenges as Saudi Arabia and other OPEC members consider using alternative currencies and joining the BRICS group, which includes Brazil, Russia, India, China, South Africa, and other countries. Andy suggests that in light of these shifts, gold is emerging as a safe haven. The BRICS bloc and China's Belt and Road Initiative are transforming global trade dynamics, reducing Western economic dominance. Andy argues that the biggest money in the world's central banks is buying gold at unprecedented levels, excluding the U.S. central bank. He suggests this is because gold and silver have proven to be enduring forms of wealth. Central banks' increased buying activity indicates a loss of faith in fiat currencies and a desire to hold tangible assets. Andy sees the ongoing shift in global financial dynamics as a move away from fiat currencies like the US dollar, toward more stable and reliable assets such as gold and silver. This shift is driven by the diminishing dominance of Western economies and the rise of alternative global trade systems spearheaded by the BRICS bloc and China's Belt and Road Initiative. Experts argue that this major shift in global financial dynamics will elevate the role of tangible assets, making them more attractive than the current system based on debt, which is susceptible to inflation and manipulation. The petrodollar system's decline and the potential for alternative currencies underscore the importance of owning gold and silver as stable, reliable forms of wealth.